In the previous lesson, I explained what the swing breakout strategy is, the characteristics of it, and what it actually looks like. In this lesson, I'll focus on the execution part. So how do you enter, where do you place your stop loss, how do you manage the position, where do you place your target, and so on. So this is going to be, again, heavy on the charts. We're going to go candle by candle, seeing price action actually develop until the moment we execute the trade, and then manage it live as the candles are developing in the moment. So it's going to be a really cool lesson, but again, we're focusing again on the swing breakout strategy. We already know what it is, we know the characteristics, but I'll still explain it really quickly when I jump on the chart. So with that said, let's have a look. So we know that the swing breakout strategy has a few characteristics to it. Number one, we're looking for one of the major strategies, the ABO, IBO, CBO, ACB, playing itself out on the higher time frames being monthly, weekly, daily, right? And then we execute it on the 1 hour chart. So that's criteria number one. Criteria number two is that we're typically going to be trading with the trend. So wave one breakout, ABO strategy, wave three run, IBO, CBO, or wave five run, ACB. Right? That's why, again, criteria number one and criteria number two are so similar, right? Sometimes you may want to utilize a little bit of discretion. Sometimes the strategy might not be there, but I would still encourage that you're trading with the trend, wave one, wave three, wave five. Right? You might once in a while find a really epic setup, but it doesn't really fit the strategies, right? But it's with the trend in general. That would be great. And sometimes you might want to bend criteria number two a little bit and take the pullback instead. I would advise against that simply because with swing trading, we're looking to get a really high strike rate and a really good reward risk ratio. And whenever you're trading against the trend, you're trading against the general momentum, right? Let's say the trend is bullish. So if you're going to the bear side, if you're taking a bearish position, you're trading against the bullish pressure. Hence why you may not get an ideal reward risk ratio. But there might be cases where you could potentially take the pullback. Let's say it's an IBOC on a higher time frame and it's just rejecting that weekly 50 EMA. IBOC on a lower time frame is rejecting the 4-hour 50, right? IBOC on a higher time frame would be rejecting the weekly 50 EMA. And therefore, you might want to consider bending the rules of criteria number two, right? You still have criteria number one because it's an IBO setup, IBOC. You're not trading with the trend, you're just taking that little pullback before you take the trade long, right? Once it rejects the daily 50 EMA. So you might want to bend rule number two and take that wave two pullback off of the weekly 50 EMA only if you really believe it's a great trade and if you really believe there's enough reward risk ratio for you to actually execute a swing trade on that pullback to, let's say, the 20 EMA or 0.3 to Fibonacci or maximum daily 50, right? But again, ideally, we're always trading with the trend. So criteria number two, wave one, wave three, wave five, ideally, and sometimes once in a while you may want to bend it, but that is, just know that is using discretion. That is not part of the strategy, right? So criteria number three is we're looking for deceleration. We're looking for the market to actually decelerate and slow down, such as on the daily chart. We're looking for that deceleration on that major support level or resistance level, daily 50 and so on, right? But we know with multi-time frame confirmation that deceleration on a lower time frame is typically finishing a trend. It's a wave five. It's finishing a wave five pattern, right? So we can, in this case, when we're looking for that daily deceleration, you can also drop down to the 1 hour chart because now we're waiting for execution, right? And on the 1 hour time frame, you should start seeing the trend coming to a close, to an end, and a trend change. So deceleration is also the beginning of a trend change on a 1 hour chart. That's criteria number three. Criteria number four is, again, the breakout. You wait for that breakout to actually enter the trade. So that's it. That's the major characteristics and criteria of the SBO strategy. Let's have a look at the charts real quick. So this is the exact same example that we looked at previously. However, in this case, I'm just going to walk you through the raw analysis in the moment, right? So the monthly chart real quick, again, it's bouncing off of the support level. We have support in this general region, it's just in this general area. A couple hits here, 1, 2. Hits of the lows right there, another hit right there, and major rejections right here. So we got a few good hits off of this general region. Then we have a double bottom and we have this breakout. We have the break of the daily 50 EMA, which was previously acting as resistance, right, multiple times here. and a break of this phase line on the monthly chart. So we're obviously right away have a bullish bias, period. It's not the most ideal setup, but I mean, it's very clear that we have a bullish bias once we have this double bottom and a breakout, right? So then we go on a lower time frame. And again, this is a CBO trade. So a lot of times you're gonna have a cleaner CBO or a cleaner IBO than what this example is. But I just wanted to give you an example of a CBO that is not perfection, but it's still a really great trade, right? So in this case, you look at the weekly chart, we're looking for confirmation. So in the weekly chart, we have this double bottom and we have this descending triangle breakout to the upside, higher high, previous highs, higher high. So we're obviously bullish and we're starting to confirm this bullish bias on the monthly chart. So what are we waiting for? Now it's a CBO, because if you look at the daily chart, the daily chart, same idea. We obviously were in a bearish trend and then we had this massive breakout to the upside. I would consider this a wave one breakout, and now we're looking for a wave two pullback. And guess what? What are we pulling back to? Right? So check out my cursor. My cursor is on 0.32 Fibonacci, because again, previous low, previous high. 0.32 Fibonacci. Daily 50 EMA will probably catch up by that time. Descending trend line on the daily chart. Weekly 50 might catch up. Weekly trend line. And we have the monthly 50 EMA, which has been acting as really good dynamic support and resistance, and a monthly phase line. A lot of support levels, hence it's a CBO because it's a full breakout on a monthly, weekly, daily, right? So that is what we're looking for. Now we're looking for a pullback. So since this is a swing trade, it might take a few weeks. So let's see how long this develops, right? But first, let's see how long this develops, and then we'll drop down to the actual execution. So now we're waiting. We analyze our charts, let's say on a Sunday, right? This is pretty much Sunday, this is Monday right here. So we analyze our charts, now we're waiting for the setup to develop, and we're waiting, right? So we'll be waiting a few days. Looks right here, it's already stalling at the 20 EMA, rejected the 20 EMA, but this is premature. I mean, this is not rejecting any major support levels. Where I want to enter is right here. You know, this is the entry. So this is premature. We don't want to enter there. And it's falling farther down. Rejecting, but check it out, right? It stalled at that 20 EMA, even formed a low test, but then it still continued farther down because again, just like a CBO on a lower time frame, you're not going to enter unless it's rejecting either the 1 hour 50 or the 4 hour 50, right? So in this case, it just hit the daily 50 EMA and it's slowing down. Perfect. Now we want to be waiting for that entry. Let's fast forward on the weekly chart. Check it out. So it's moving. There we go. You know, so this is properly synced with the daily and the weekly chart. So you can see the weekly chart is already rejecting the back end of this trend line. I can even fine tune it a little bit. There it is. You know, so we have a perfect breakout and a perfect retest of this weekly trend line. And at the same time, we have a perfect breakout and a perfect retest of the daily trend line, daily 0.32 Fibonacci, daily 50 EMA. So what does the 1 hour chart look like now? And you can see the 1 hour chart at this point in time is decelerating, right? So we don't really need to focus on the 4 hour chart. I'll explain why in a second. But we want to make sure, again, criteria number 4 or 3? Yeah, 3. We're waiting for that deceleration, right? So as it's decelerating on this daily chart, deceleration is typically giving us a trend change. Wave 5 is finishing, trend is developing, a new trend potentially is developing on a 1 hour chart. And you can see we have this 1 hour descending triangle with a triple bottom, massive bullish MACD divergence as well. And you could potentially start executing this with an advanced breakout. But let's say you're a swing trader and you don't take advanced breakouts, you're just waiting for the SBO strategy. So what do we look like now? You know, so now we're starting to position size. Remember, we're waiting for the breakout. So we could take the break of the trend right here, the break of the trend line, the break of the 1 hour 50 EMA, and this would be roughly your position size, or you can wait for roughly a break of the highs in general, kind of like a strong break of the previous high, either or, you know. Obviously this one will be a little bit safer because it will be a proper higher high, but in general, this would already be the breakout, you know, so you can wait for that. So let's see what happens. This is our position size roughly our stop could be, you know, below the lows here, something like that. You know, target, what would our target be? So in this case, we could obviously target the previous highs, but we could also use Fibonacci extension to target 0.618 Fibonacci extension. It's the highs on a weekly chart, it's the highs on a daily chart. There's some resistance there on a monthly level, multiple hits. Seems like a good target placement. So 2.04 would be the most ideal target. So 2.04, what would that look like? Let me make the digits a little bit larger here for you guys. 1 second. There we go. So 2.04, I can make this larger too. There we go. So now we're looking for about 7%, right? Roughly with a position size like that. So at this point, we're waiting for the entry. We're waiting for the breakout, right? So let's see what happens. The higher time frames are already good. We're already could potentially go for an entry here. Let's see what happens on a daily chart one more day. Boom, see, exploded, right? So this was just before that explosion. So we could already be entering with an ABO if you want, or specifically as a swing trader, you're waiting for that swing breakout. Boom, here's our entry. So obviously now we gotta enter a little bit higher, you know, so our entry would be right here, exactly as the candle closed, okay? We gotta have a wider stop. 135 pip stop loss does not protect us. We gotta go a little bit wider. So I initially had 165 in there. So this is a good stop loss, protects us really well, you know? So we gotta be really quick. As this is moving, we gotta do a new position sizing. So make it a little bit wider, 165. And again, this takes seconds to do, right? Doesn't take too long. 165 pips, we're targeting 204, 5.76%, and we're live in the position. We are live. So what happens now? Boom, another explosion to the upside, right? So that's why you gotta be quick with those entries. And it's going. Probably we're not gonna get that IBO, you know, that a day trader will be waiting for now. A hybrid trader will be waiting for that IBO. See what happens. And it's just going. Check it out. It had a pullback, but that was literally within an hour. And then just now exploding again to the upside. And how long will it take us? So at this point, you see how far that 1 hour 50 EMA is? Let's have a look at the 4-hour chart real quick. So 4-hour chart, this was again before the entry, just when that ABO was happening. And let's see how this 4-hour chart develops. And here was the entry. So if you wanted to be a little bit safer, in reality, you could have waited for the 4-hour 50 EMA breakout. But I mean, that would be quite high. You know, if you really wanted to, you can be safer. You can even have a much safer entry. And you can, instead of utilizing the 1 hour 50 EMA breakout, you could wait for the 4-hour 50 EMA break. But that would massively lower your reward risk ratio. And it would be, in this case, 2.04 as the target, and you're getting 3% versus nearly 6. You know, so again, in my opinion, I prefer entering on the 1 hour 50 EMA break rather than the 4-hour 50 EMA break, simply because again, on the higher time frames, that's where the major confluence is, right? The strategy is already applying itself on the higher time frames. The higher time frames are already great. So the next entry, the clearest entry, the earliest entry will be the SBO. Simple as that. You know, sometimes the 4-hour 50 EMA is going to be so high that to have our stop loss below the lows is just going to erase so much profit out of the table. You know, that's why, again, that's almost 3% profit less, almost, you know, taking it on the 4-hour 50 EMA break versus the 1 hour 50 EMA break. Hence why I prefer the 1 hour 50 EMA break as a swing entry. So with that said, let's remove this and let's see how this 4-hour chart plays out. Boom. So here will be pretty much the 4-hour entry. And see how it closed? It closed so high. and then never pulled back for that CBO, barely, like almost, but see, it never really did. So maybe you could have caught it with an entry order, but probably not. Your entry order would still be a little bit lower with a CBO. That would have been clean. Let's see, that's the benefit of, as a swing trader, executing with an SBO, because you'll just always get into the trade. And because your stop loss is always well protected, it's not that much of a risk entering on the break of the 1 hour 50 EMA, because you have a well protected stop loss. Imagine you're taking a CBO, your stop loss will be at 0.618 Fibonacci. This is actually a safer trade because your stop loss is below the lows rather than at 0.618 Fibonacci, and you're guaranteed an entry every single time. Versus a hybrid trader taking a holy grail, you're not always guaranteed that you're going to get in with CBO, IBO on a higher time frames. But obviously if you did, it's going to be much higher reward risk ratio. Like if you position this out real quick, right, check it out on a 1 hour chart. If this actually pulled back, because it was a really good setup on a higher time frame, so if this actually did pull back, maybe you could have caught it potentially if you had an entry order placed. And the difference would have been 7.2% versus 5.76. But look at our entry. Our entry with a SBO is much lower than the entry with a CBO, right? A lot of times the entry of the SBO will be lower than the entry of the IBO, right? Obviously our stop placement is much further down, but it's not much of a difference. It's less than 2% of a difference, right? But obviously if you're a true kind of day trader, right? A true hybrid trader, you would also be waiting for this entry instead, right? Because in general, it will be more profit executing it as a holy grail. But from a swing trading point of view, as a swing trader, SBO will always guarantee an entry. As a swing trader, because you're not day trading, you're not catching those quick one-to-one positions, you want to make sure that when those good higher time frames show themselves up, when you have those good higher time frames, that you always get into the trade, right? SBO guarantees an entry. As long as there's an entry, you will always be in it, right? As long as you're on the charts to execute. That's the beauty of an SBO, right? So coming back here, that would just be a hybrid potential entry, but it never really presented itself. So we continue to go up. So let's have a look at this 1 hour chart. How long does it take us? At this point, we can take this stop loss. Let me put it in here. All right, so at this point we can take the stop loss and already bulletproof. So you got to decide also one thing you got to decide is what kind of management you want to be applying. As a swing trader, you can apply short-term management. You can also apply long-term management. It's really up to you. You can apply both, right? As an example, if you have a major resistance level that you're trading through, but you want to push it farther, but if there's that major resistance level kind of in between your major target, you might want to start off utilizing long-term management to give the position room to breathe in case it kind of stalls and consolidates at that resistance that's in between your target. Let's say, going back to the higher time frames here, let's say you're targeting 0.618, but you believe this is like a major resistance area. So you want to push it to 0.618, but you think that it might consolidate here a little bit. In my opinion, this is with the trend. There's nothing major here, right? Maybe a little bit of resistance, but nothing too crazy. So I don't care. But sometimes there might be like a major resistance area in between your entry and your main target. So you might want to start off with long-term management. This would be a little bit more advanced. You might want to start off with long-term management, because if it starts consolidating and slowing down on this resistance level, it will typically be breaking the 1 hour 50 EMA, right? So with short-term management, you'll be out of the position. That's okay. You would still be banking 3, maybe 4%, right? Maybe 2.5%. However, with long-term management, you would give it room to breathe because it would have to break the 4 hour 50. And then once it actually breaks out, at that point, you can go tight and trail the 1 hour 50 EMA. Right? Once it breaks the major level. That's kind of like a hybrid management approach. Otherwise, you just decide. At this point, I'm always going to use long-term management as a swing trader, or I'm always going to use short-term management as a swing trader. Up to you, right? Up to you. If you want to be simple, you just pick one or the other. If you want to be a little bit more advanced, you utilize both of them. Start off with long-term, and then once it breaks a major resistance area, start using 1 hour short-term management, right, as an example. So let's see what happens here. We can bulletproof our position already, right? We can even, if you're using short-term management, you can already lock in about 1.5% if you want, right? Long-term management, you would have to stay below that 4 hour 50, right? So let's see what happens. And see consolidation at those highs. But now we're never getting that 1 hour break, right? So again, we can move our stop loss a little bit higher. We still want to keep distance, right? Still want to keep that distance. Boom, exploding. We can even move our stop loss even further now. Lock in. Now we're locking in about 3%. And little pullback. We can even move our stop loss. See, at this point, as it's approaching your target, right, you can even get a little bit tighter even, you know, and then boom, target hit, right? So target was hit, all good, and now we're out of the position, right? And then when does it finally break the 1 hour 50? Just curious. Right here, you know, so you'll be exiting. If you didn't have a target place, you'll be exiting right there. So that it is. That's it. 5.76% banked with an SBO strategy, right? In this case, in this example, we never had an IBO, we never had a CBO to execute. It just continued to go up and up and up and up. Hence, again, once we have those beautiful higher timeframes, it's so important to get into the trade as a swing trader, right? But that's kind of what the trade would actually look like. If we go to the daily chart real quick, fast forward, look how fast that went. That was profit hit within 1, 2, 3, 4, 5 days. It's a week, you know, 5 business days. Weekly chart, just exploded, right? Within a week, target was hit. Within 5 business days, the profit target was hit. So it's not always that we're gonna have such a quick position, you know, that's gonna go from entry to profit that quickly. But I mean, there's gonna be many cases where it will. In other cases, it might last 2 weeks or it might last a month. No big deal. As a swing trader, you're executing roughly 3 to 5 really good opportunities like this a month. If you catch them with an SBO strategy, at minimum, every single one would be a minimum 3% profit. That's something that I didn't talk about. But what I really want to say is that it's not a mandatory rule, but I highly recommend that as a swing trader, you're looking for at least a 3 to 1 reward risk ratio. At a minimum, I would say 2 to 1 at the minimum, right? I personally aim for a 3 to 1 reward risk ratio. If I'm executing a swing trade, I'm looking for a 3 to 1 reward risk ratio, right? And when I'm applying the strategies to the higher timeframes for that holy grail setup, right? It already makes the setup so strong that I'm just looking to get into with that SBO strategy, right? And a lot of the times when you're getting in with an SBO strategy, a lot of times you'll be able to get 3%, 4%, 5%, sometimes even 10%, depending on how big that run is that you're targeting, right? You can get a really good reward risk ratio, but typically you'll probably fall within that 5% range. So that's kind of my recommendation. I hope that all makes sense. It's a pretty simple strategy to execute. At this point, you already have all the skills. You've already learned the previous strategies that are kind of a must for a swing trader, in my opinion, because knowing those ABO, IBO, CBO, ACB strategies, knowing them really well and knowing how to find them on a higher time frames will just make you such a better swing trader, right? Because I find that a lot of people, day traders specifically, if they're just utilizing those strategies on a lower time frame, they're often not focusing enough on the higher time frames, and their higher time frame analysis can improve dramatically. I find that a lot. As a swing trader, you're focusing on those higher time frames as a priority, right? Whereas a day trader is daily, 4 hour, 1 hour. As a swing trader, it's monthly, weekly, daily, period, right? Those are your main time frames. And when you're looking for the ABO, IBO, CBO strategies, ACB strategies on the higher time frames, you're already with the trend. You have the patterns, Elliott wave theory applies, multi-time frame analysis applies. You got major support levels, major resistance levels, all is good. And then you're just looking to get into that trade. Hence, SBO strategy, majority of the time, as long as there's a proper rejection and a proper breakout on a 1 hour chart, you're always going to get into that trade, which is key as a swing trader, because you're only going to have a few opportunities like this a month, right? Versus a day trader, they're taking pullbacks and they're just much more aggressive. Swing trader, you're much more patient, which is nice as well. You know, it's much more easygoing than day trading. That is it for the SBO strategy. I hope that all makes sense. It's a very simple strategy to execute, but it's a very good one, right? I like it a lot, specifically when you use the other strategies on the higher time frames for extra confirmation, just to make your analysis, right? That is it. Hope that makes sense. Hope you enjoyed the SBO strategy. It's a really good one. I like it a lot. It's one of my favorite strategies, to tell you the truth, as a swing trader mainly, instead of being like a proper hybrid, right? I really like the SBO strategy to get into the trades. Obviously, it makes my reward risk ratio a little bit smaller than if I was executing it as a hybrid approach, but it guarantees me an entry every single time as long as there's a really good setup. That is it. Hope you enjoyed this lesson, and I'll chat to you in the next one. Take care.